In this video, traders, we're going to look at, are you losing money day trading? Then try this. Hey guys, warm welcome to you. All right, so thank you all subscribers to the channel. Thank you all of those who are putting constructive comments in any of the videos. And I know there are many of you out there who are regulars, who are commenting regularly, and I do appreciate you, especially, as do I appreciate anyone who comments on the videos, who likes the videos, who subscribes to the channel, sends me messages, all that good stuff. It's great that we're building a decent community here of traders who want to become better regardless of the level you're at. Anyway, this is a question that came in. Listen, I'm losing money at day trading. I'm not going to put the name up there. I'm not going to do this. It's actually a reasonably common question, but wrapped up differently. And guys, everyone's been through this. I've been through this. Anyone here who's been here kind of multiple years and has gone through the rough patches have been through this. Now, this is from a day trader's perspective, from a swing trader's perspective, similar, slight differences. This applies really to day traders, this video. But if you're a swing trader, don't click off just yet, because there will still be some things in here that make sense to you, even though you have to adjust it slightly, and perhaps do another video on that later on. So the first thing is, every day trader will go through a phase where you're like, oh, I'm just losing money consistently. In actual fact, I'm so good at losing money that if you faded me, you would be very, very happy with the performance. It's almost ridiculous how bad you are at trading, or I am at trading. It's almost unnerving how badly I'm trading and how much of a hole I'm digging. Okay, we've all been through that. If you've been trading for a long period of time, we've all been through that. Hey, even the top guys who are trading in billion level say the same thing. They're like, listen, when we're digging a hole, when things aren't going well, it just happens. You will get runs where you just think, I do not know what I'm doing wrong. And when it first happens to you, it's a shock. Maybe you've been performing okay. Maybe you just started off and it's just been a bad cycle from the start of your trading. That's normal as well. Now, the good news is, as you progress better, you recognize this earlier and you stop damage before it occurs. But when you're new, or when you're kind of going through the cycles of trading, you tend to think, hey, I'm just the worst trader ever. I'm just constantly losing money, and money's just dripping out of my account. I'm just doing significant damage day after day. So if that's you, this video is definitely for you. So if you're losing money day trading, try this. The first thing, and the first thing only, which people is the main thing to do, is just to stop digging the hole. Just stop trading. Just go stop, right? Just, I will repeat the word stop, but it's ridiculous how, I'm going to put myself into this category as well, how we as traders think we can dig ourselves out of it. Now, if you're a subscriber, you do know we've covered this kind of thing, touched on it, whether it's in videos, when I've gone off tangents and talked about this. We've done specific videos where we've mentioned this exclusively, but it's so worth talking about again. Just stop trading. If you are losing money, stop trading. The guys who are at the very, very top of the game say it all the way down the curve to anyone who's had any success in the market says, hey, you know what? When you're not on form, just stop trading. Stop the damage, because once you've stopped the damage, you can start to repair. Do not try and dig out of it. So if you don't do anything, just stop digging the hole. And I put digging because it feels like you're digging a hole for yourself. You're losing capital, you're losing emotional capital, you're losing confidence. Nothing of that at all is good. So stop digging. Right. Now, assess and accept. What I mean by that. So the first really should be accept and assess. So accept, that means, listen, my new account balance is X. I had an account balance of whatever it may be, 5X, hopefully not that much, but could easily be that, 10X, could easily be that, whatever. I had an account balance that is no longer the case. The case is my account balance is this. You may not like it, but you've got to accept that. You're not going to be getting it back quickly, and accept that too. Once you can accept that and say, hey, this is where I am now, this is my position, it's all part of the deal. Now, what I need to do is assess and see what is going on, what has caused the damage. Is it a couple of bad trades? If it's a couple of bad trades, that's great news, right? That's an easily fixable problem. Okay, not say easily because it's still challenging, you don't want to recur it, but you know you can identify. The biggest problem you have when you're a losing day trader is to identify what problem is. Most people, it's a massive amount of things. They're over trading, they're doing trading too much position size, trading too many markets, trading this strategy is wrong, operational perspective is wrong, all of it is wrong, and it's just compounding and they don't know where to go. If it's one or two losing trades and you had success up to that, The good news is that's a relatively easy fix. It's going to take time, but you can do it. You can nail down, you can nail your focus. And I've done a video specifically on dealing with one problem at a time before. So assess and accept. Then we're on review and evaluate. So this is evaluating what went wrong. Like I say, if it's one or two bad trades that you've just gone crazy on, you know you need to put some steps in to stop that. If it's just bad trading and you're just losing money all the time, you need to say, well, what's causing it? Like, there must be something good in that trading. Am I getting a good entry? Am I getting a bad entry? You know, am I holding stuff for too long? Am I too late? Am I too early? What about if I change this in it? And again, you're just looking very, very deeply. Spend loads of time on this part. Okay, once you've stopped, stop. Give yourself a rest if you need to, relax, calm down, say, you know what, now I'm going to go in and reassess. And this is where review and evaluate to see what's gone wrong. There is no point whatsoever in wiping out half of your account, 3/4 of your account, 1/10 of your account, whatever it may be, and not learning a lesson from it. If you just shrug it off and go, yeah, and you just stop digging, you accept, and then you skip all that and you start again, you have learned nothing, and you may as well take a lesson from it. It's cost you money, so get your money's worth. So review and evaluate. What the heck has gone wrong here? And it will feel like everything's gone wrong. It will feel like I can't do anything right. I'm just digging a massive hole. I'm losing money consistently. How is this possible? But there will be a pattern of behavior in there somewhere that if you eliminate one or two of those things, it will massively, massively change your results. Yes, it may not make you into a massively profitable trader straight away, but it might make you into profitable loss, kind of over and above that zero line for a bit, which is a massive improvement from that straight down that you've probably had when you've started this out. So reviewing and evaluate, and I cannot stress enough, guys, after stopping the digging, of course, that this is so crucial and key. Get your charts out, print your charts out, spend the time to do this. However long it takes, spend on it, because the reward or the ROI from doing this is huge. If you want a decent risk reward trade, this is the one. The risk is the time you take to do it. The reward is absolutely massive. It actually would depend on your career potentially. It depends on, you know, it's so worthwhile. I'm going to want about it, and you probably said, listen, shut up, get on with it, and I will do. But honestly, review and evaluate. Right, prepare and plan. So once we review and evaluate, we're going to prepare and plan to move on. We've been losing money. We're going to be fearful of losing money. We're going to be in a funny state of mind. So a lot of that preparation, that planning comes down to the mindset. It's like, listen, how much of the decision-making process can I remove from me with my strategy? You don't want to be making too many decisions on the fly, because you're going to be bruised. You're going to be damaged. You're going to have the psychological capital dented as well as the financial capital. You don't want to be making too many decisions. So take a lot of the decisions off your mind by planning what you're going to do. Is that going to be the perfect way to trade? Probably not for you, but you want to get back on the bike, back on the saddle, get some progress. Now we want to start moving forward. This is the key thing you need to keep telling yourself. I just need to move forward slowly. You have to accept loss, which is why we always dial down the position size. That's part of the plan. We don't need to go into that, but you get the idea. We want to keep the position size small, trading small, go back into it with a new strategy, with new preparation, moving forward slowly. That's the key now. Moving forward. Yes, you will lose, but we're sticking to the plan. The position size is small. We're not digging a massive hole. We're not doing this anymore. We're doing this. We're buying ourselves time. We're building back the confidence. We're finding the nuggets of value, the nuggets of good trading, and we're building on them. We're reiterating now. We're adjusting, we're adapting, we're iterating, rinse and repeat, preparing, planning, starting again, moving forward slowly, small size, small number of trades. Carry on, adjusting, adapting as the market changes, as more likely as we gain confidence, as we gain improvements, and then we can start doing this. And then before you know it, you're back to where you were. You've looked back and you've said, you know what, that may well have cost me 10 grand, whatever the number may be, right? That may well have cost me 10 grand. I've now got that back. I'm now back to where I was. I am in a significantly better position than I was here Financially, no, I'm back to where I was, but I have learned so much in there that, number one, if I notice myself digging a hole again, I'm going to stop it early. This is why we talk about all these books and everyone says, hey, just stop digging the hole quickly as possible, and you'll recognize that you don't get into that in the first place. But the fact that you have gotten to it, the fact that you've been able to assess, accept it, move on, move forward, and eventually now get your equity curve back up and back to where you are, means that that will stand you in good stead in the future if things don't go to plan, which they undoubtedly will or won't, whichever way you want to look at it. All right, guys, if you enjoyed the video, a thumbs up is appreciated from you. And as I say, I do appreciate your support and your subscription. Take care, whatever you're trading out there. See you next one. Bye-bye.